It's not going to be a long presentation today, as hopefully you've got through most of everything by now, but there have just been a few significant things that have changed in the last few days, and I just want to try and keep you up to date with all of those, and also potentially get rid of some of the confusion which is eminently possible around some of the way in which JobKeeper has been described and the way in which things are going to happen. So welcome to our latest roundup on JobKeeper, which is for today, the 28th of April. And let's rip into it, because a bit to talk about. Okay, so first things first, ladies and gentlemen. On a non-JobKeeper thing, isn't it neat to see this curve plummeting like this? That's bloody fantastic. And as I was outlining to someone only last night, the sooner we can get that down and keep it down and all the rest of it, the sooner we get back to normal work, and all the people who are missing out on JobKeeper and the other forms of assistance, of which there is well over 2 million people who are missing out, who basically have not got any income, the sooner we can start getting the whole economy back to work. So this is actually from an article in The Guardian, which was very encouraging, but there you go. All right. The thing that I just want to make sure that everybody is aware of is the cash flow boost for employers. It's something which is calculated and given to employment entities automatically as soon as you lodge your March 2020 BAS. And effectively it's saying whatever your PAYG deductions were for the March 2020 BAS, the government will give you 3 times that back as a credit when you lodge that BAS, and with a limit of $50,000 for that quarter. And again, you'll get another credit once you lodge your June BAS, and another one later in the year as well. It is a really significant boost, because effectively for many of us, it will either significantly remove any liability that's coming out of the March quarter BAS, and anything that's left over will, as I understand it, be refunded directly to the business's bank account, and that will all help towards being able to pay all these salaries and other bits and pieces that we are having to continue to pay at this point in time. So that's I encourage you, if you haven't done your BAS already, make sure that you go and do it, and when you've finished it, you should see a lovely little a lovely credit appearing on your integrated client account, which is always welcome. The other thing, make sure you contact or look at the State Revenue Office website in your state. Thankfully, virtually all states have either increased payroll tax thresholds or removed them altogether, like refunded people altogether for whatever they've paid in this financial year so far. I know Victoria did, for example, but all the different things, all the different provisions depend upon which state you're in, and I also know that some states have also allowed people who are paying land tax to defer payments, not get rid of them, but at least defer them or spread them out. So that may also help significantly in terms of your cash flow. So I encourage you to check out the State Revenue Office websites for those sorts of details. Everyone's aware, of course, of what JobKeeper is, I presume, but where your turnover for a small business has dropped by 30% or more, you're eligible to receive, or potentially eligible to receive, $1,500 per fortnight for each eligible employee. And those fortnights start from the 30th of March. One of the key things that has changed only in the last 24 hours is that the deadline for paying your employees their entitlements from the 30th of March up to the 30th of April is now the 8th of May. That was just extended. Okay, so this date, 8th of May, that's the last date where you can have paid those catch-up or the minimum entitlements of $1,500 per fortnight or the equivalent thereof. You've now got until the 8th of May to make those payments. It was originally the 30th of April. The other thing that's changed in the last few days is that the registration date for the initial period, to the 30th of April, has now been extended up to the 31st of May. So you can still apply for the April period all the way up until the 31st of May, but you must have paid your employees by the 8th of May 2024 April. Make sure you have a look at the ato.gov.au JobKeeper site. It's got all of that information in there, and it does change on almost a daily basis, so it is worthwhile adding that as one of your favorites in your browser. Pretty much like I've got here. I've just got this sitting up here as a favorite. That'll take me straight to that one, and that one will take me straight to that one. They're just quick and easy ways of getting directly to that information and seeing what the heck's changed or not, as the case may be. Anyway, back to JobKeeper. Okay. Today, the critical things that I want to focus on are how you are calculating how and what to pay your employees. I want to clarify when to use the JobKeeper FINISH codes and when they are applicable. We're going to talk about error corrections. One of the things that can happen is that you inadvertently use the wrong JobKeeper start code or the wrong JobKeeper FINISH code, and there are very limited opportunities to correct that. And so if you do make a mistake, we want to talk about how to fix that up, or at least talk to us. I want to deal with the issue of how you're going to pay your variable weekly wage employees under the JobKeeper provisions, and just mention in passing this alternative turnover test which helps in regards to your eligibility for the JobKeeper subsidy. So when looking at what makes up the minimum threshold per fortnight of $1,500 or the equivalent on a weekly or monthly basis, there are certain things that need to be included in calculating have you reached that minimum $1,500, and some things that need to be excluded. So the things that need to be included are obviously your salary and wages, including any salary sacrifice measures. So for example, if you were paying someone $1,600 a fortnight, but they were salary sacrificing $300 to super, meaning that then their taxable salary would be $1,300. It's not the $1,300 that you will be using as the basis of that. It's actually the $1,600, i.e. the before salary sacrifice amount that is used for determining have you paid your employees that minimum of $1,500. Any bonuses or commissions need to be included as part of that. Some people are still getting them. Some people are rocking along big time, which is great. Any allowances that you pay them. And I contrast allowances, things like your kilometre allowances or any other special role allowances or things like that. I contrast that against your expense reimbursements, because expense reimbursements are not included as part of this. Most of this hopefully is fairly would seem fairly self-explanatory or common sense almost, but just wanted to be absolutely clear of what should and shouldn't be in. Some people have been, unfortunately, having to lay some people off and may have done some eligible termination payments and things of that nature, and some people are still leaving as part of this. So if you're doing those things, or final pays, lump sums A, B and E are part of the $1,500 minimum, whereas lump sum D payments are not included as part of that. The other thing that is part of the $1,500 is the taxable component of any eligible termination payment, whereas the tax-free component is not part of it. The other key things that are not included in your $1,500 is any of the government paid parental leave. That's excluded from that. And same for any workers' compensation, absence from work payments. The other one, which is not part of salaries and wages, is your director's fees. Again, these are the core elements that I wanted to bring to your attention. Make sure you look at this particular link. It's just part of the JobKeeper aspects, but those are key things that you need to bear in mind as part of this. Now, the fortnights and how they work and what it all means can be daunting, to put it mildly. So I've created this table which hopefully makes it a little clearer what we're talking about. When we talk about pay dates for your employees, we're talking about what is the pay slip date. So if the pay slip date is anywhere between the 30th of March to the 26th of April, that's when you've paid your employees. That's the actual date that is referenced and is relevant for deciding what fortnight that falls into. All right. So what I'm saying here is that if your pay date on your pay slips is from the 30th of March to the 26th of April, you will be reimbursed by the tax office for the $1,500 per fortnight per employee. And the total amount that you will receive if you're getting both fortnight 1 and fortnight 2 will be $3,000 per employee for that time frame. If you've also had to make top-up payments for amounts that are going to be claimed in the April time frame and paid up until what was the 30th of April, but you now have until the 8th of May to make those payments. Again, they will be reimbursed in May, and they are included in that $3,000 amount per employee that you'll be reimbursed by the ATO for fortnight 1 and fortnight 2. If the pay date on your pay slip, and this is normal pay slips, not the top-ups, but if the pay date on your pay slips falls between the 27th of April and the 24th of May, that will be reimbursed in June. And again, the amount per employee, presuming that you are able to claim for both fortnight 3 and fortnight 4, will be $3,000 per employee. And the rest of the dates, therefore, hopefully are self-explanatory. If your pay slip date is between the 25th of May and 21st of June, you'll get reimbursed in July. And that's the amount you'll receive if you're claiming for both fortnight 5 and fortnight 6. And in June, from 22nd of June to the 19th of July, you'll get reimbursed in August. And again, that will be $3,000 for fortnight 7 and fortnight 8. The next month, from the 20th of July through to the 30th of August, is a special one, because in that time frame there are deemed to be what are called 3 fortnights, and that will be reimbursed in September 2020, and the amount you'll be reimbursed will be $4,500 per employee if you qualify for, actually I've done this wrong, that should be fortnight 9 and 10 and 11. I apologise for that. That should be 9, 10, 11. When we actually release this again, I'll make sure that shows that correctly. And then the last one, which is from the 31st of August to the 27th of September, that'll get reimbursed in October, and that will be $3,000, which will be fortnight 12 and 13. I'll make sure that that's corrected before then. So that's basically laying it out for you, everybody. That's how the whole thing's going to be paid. Presuming, of course, that you still are eligible by that point in time. And I really hope that by the time we get through to sort of August, September, that business has significantly improved. Okay, so just to review as a catch up to say, okay, have you done everything that you need to do? First off, I'm presuming at this point that everybody has set up the kinds and items to record both the JobKeeper top-up payments and the JobKeeper start codes. Don't worry about JobKeeper finish codes at this point in time because we can help you do those, but you'll need to have those. Where you have got an employee who has not been getting at least $1,500 per fortnight or the equivalent thereof, you need to add the JobKeeper top-up to their employment details and pay the catch-up amounts. It was until reading this morning, the 30th of April, but it's now the 8th of May, and you'll see that in the updated presentation. And then from May 2020 onwards, you'll continue to pay those employees on the normal cycle, including the top-up amounts. You'll need to add the JobKeeper start code into their employment details for the first fortnight claimed. So if you are claiming from fortnight 1, you'll need to put in JobKeeper start FN01 to claim for both fortnight 1 and fortnight 2 in the April timeframe. And once you've put that in and generated a pay slip with that start code in it, that needs to be submitted as a pay event in Single Touch Payroll by the 30th of April. And then from May 2020 onwards, the start code can just stay in the pay slip as you generate it each pay period. That's fine. And you just submit via Single Touch Payroll as normal during that time frame. Where an employee leaves, you're then going to need to record a finish code for the fortnight after their employment finishes. And by that, I mean that let's just say that they're going to finish on the 30th of June, you'll then be putting in a JobKeeper finish code for the fortnight that starts after the fortnight where the 30th of June is. And I'll give you an example of that here. So, if an employee leaves on the 30th of June, and the 30th of June, of course, falls into fortnight 7, because it falls between these two dates, the JobKeeper finish code that you will use will be fortnight 8. All right? So that's one scenario if somebody leaves. But if your business subsequently, or at some point you are no longer eligible to claim the JobKeeper subsidy, and let's just say that after the 31st of July, business has improved and you're no longer claiming the JobKeeper subsidy, you'll need to put into everyone's pay a JobKeeper finish code of, in this instance, JobKeeper finish FN10, because the 31st of July falls into fortnight 9 in this time frame. So the first fortnight after that time frame is fortnight 10. And that's what you'll do there. But I hasten to add, when you feel, or if you're in that situation, please feel free to call us and we will turn around and help you put all of that together and submit it to the ATO via Single Touch Payroll. The most common thing that we've been told that they've had errors in so far has been around start codes and people inadvertently putting in finish codes and things like that. Now, because of the short time frame that has been available to put this whole JobKeeper program together, the only way that it was able to be done in such a short time frame was to use the existing logic and technology that exists within the Single Touch Payroll environment. So there are limitations to the way this works. If there had been more time, there would have been additional logic and a whole different way of doing this, but there just wasn't time. So as silly as perhaps some of the things that have been done may seem, it is a factor of time and just the fact there is no way that payroll providers could have developed something and the ATO also developed other logic and technology to make this a little more streamlined. So it is the best that could be done in the short period of time. So the critical thing being, if you do make an error with the start code, you can go and correct it by creating another pay slip and putting in an earlier start code. So if you inadvertently put in JobKeeper Start FN02, meaning fortnight 2, and you meant to put in fortnight 1, the way to fix that would be to put in a finish code for fortnight 2 so that counteracts the fortnight 2, and also submit a JobKeeper Start fortnight 1 code and get that through to the ATO, because the ATO will always use the earliest start code as the correct code for when they start the payments. Anything where they've got a start code and a finish code in the same fortnight, they will ignore. But again, I stress, if you have made an error, please contact us and we'll be more than happy to step through getting that corrected and submitting that through to the ATO. You don't, unfortunately, have the luxury of being able to fix it to fortnight 2, then to fortnight 1, then back to fortnight 2, or to fortnight 3 and back to fortnight 2. The systems just are not capable of doing that. So hence, if you've made an error, contact us, we'll help you sort it out so that it only happens once, or hopefully only happens once. All right. Talking now about variable weekly employee wages. This is a scenario where, for example, somebody may earn $500 one week and it's just based on their timesheets, and in the second week they may earn $800 or whatever it may be. So in other words, they're not on a standard weekly wage. You are allowed, in fact the way that you need to do this is that you don't do a top up in the first week, because you don't know what they're going to earn in their second week. So you just pay them as normal in the first week. But in the second week of that fortnight, you then need to turn and say, okay, based on what they've earned in the second week and what they've earned in the first week, do they reach that $1,500 threshold for the fortnight? And if not, in the second weekly payment, you would top them up to $1,500 for that second week, or for the fortnight, which is going to be paid in that second weekly wage. All right, and then you just continue on to the third one. You pay them as normal in week 3, and then in week 4 you say, okay, so in week 3 and week 4 in total, have they earned $1,500? No, I'm going to top them up to $1,500 in the week 4 wage, and then you move on to week 5. I hope that makes sense. Again, contact us. We're more than happy to talk you through that. Now, for pretty much everyone that I know, the alternative income tests probably don't apply, or I hope they don't apply, because they deal with certain situations where you've had some radically different impacts on your business in the last 12 months. The alternative income test, in one way, is primarily targeted at businesses that haven't been in business for 12 months or have experienced unusual trading conditions within the last 12 months due to things like they've sold part of their business, or they've acquired another business in that time frame, they're a startup, or some other significant event like that has taken place within the last 12 months, which makes comparing what is happening now difficult to do with 12 months ago. So if you believe that that is something which applies to you, go and have a look at this particular link. This is at the moment the most up-to-date one. That's actually it comes from the legislation side of the federal government, but it's reasonably plain English, so to speak, and make sure you work through it with your accountant and find a way that makes you eligible for the JobKeeper subsidy. Okay, so that's basically all I really wanted to cover today. Liv is going to turn on all of your microphones so that if you have a question, please feel free to ask it now. You will need to turn on your own microphone within the little TeamViewer app, but if you have any questions, please feel free to ask them now.
David, it's Linda. Can you hear me?
I can hear you.
Oh, that's good. How are you?
I'm fantastic, thank you. How are you?
I'm alright. Just one question, and I think I've sussed it out because when we got all these codes for the JobKeeper and set it touch payroll,
Yep.
what happens if the employees have already, if they're on weekly pays and the employees have already been paid?
Okay. So if they're on weekly pay and they've already been paid in the fortnight, somewhere between the 30th of April, 30th of March and the 26th, I think it was, of April, that's fine. All you need to do is go back and look at each of those weekly pays and aggregate them into the fortnight. So if you just bear with me for a second while I go back to this screen. Now, so ignore the finish codes because that's not the relevant bit. But here you see fortnight 1 and fortnight 2, right? So fortnight 1 is for any pay date between the 30th of March and the 12th of April, and fortnight 2 is any pay date between the 13th of April and the 26th of April. So if you've got weekly employees, you'd say, okay, so the 2 weekly pay slips that fall into that time frame for fortnight 1, did that was the total of those 2 pay slips at least $1,500 gross, right?
Yep.
If it was $1,500 gross, then you have already paid them all they need to be paid for that fortnight. It's only if the sum of the 2 pay slips that fell into that first fortnight were less than $1,500, and not $1,500 after tax, but $1,500 before tax, and including, you know, salary sacrifice and everything else to gross it up. It's only if the sum of all of that is less than $1,500 in that fortnight that you would then need to do a top up for that fortnight. And the same for the second fortnight, or the 2 pay periods that fall into the second fortnight. If they were less than $1,500, you need to top them up. If they were more than $1,500, you don't have to top up anything. You've already paid them everything that they need to be paid as part of the JobKeeper subsidy program.
Yeah, there was one that we topped up, that she got topped up for the 3 weeks prior, to this.
Cool.
So, yeah.
Well, cool up to a certain point.
Sorry?
Cool up to a certain point.
Yeah, because the problem was that these payrolls were done through STP reporting prior to getting all these codes.
Yep.
Now, I'm told that from going forward now for each pay, I have to go like JobKeeper Start FN01, starting on the next eligible pay period, which was last week.
Yep.
To get that money. Is that right? Because they said you don't redo the pays that you've already done.
That's right. You don't redo the pays. You just need to be able to submit a pay or a pay slip, which includes JobKeeper Start FN01, right?
Okay.
And in JobBag, you can do a 0 pay slip with just that JobKeeper Start FN01 and submit that. All right. If you're using something else, I don't know what they'll be doing, but in JobBag, you can do that. You can raise a pay slip for 0 with just the JobKeeper JobKeeper Start FN01 in it, and submit that via single touch payroll, and bang, it's all done and dusted.
Okay, all right. Okay. Yeah, it's just a little bit confusing. I just got a bit confused after I'd already done the payrolls.
Yep. Yeah, I know.
and like you're reading so much stuff that does your head in.
Yes.
Oh dear.
Yep.
No.
That's all right.
I just, yeah. Do you know anything about? Is there anyone else or anything about sole traders? That's another thing I'm kind of.
Sole traders, as to whether or not
Yeah.
they can claim.
Yeah, I'm talking only about myself here.
Yeah.
Yeah, because I've fallen into that threshold of
Okay.
losing
So
that
yes.
money.
So yeah, if you as a sole trader, if you've got an ABN,
Yeah,
and your turnover has dropped by the requisite amount of 30%, you can
yeah,
register and claim the JobKeeper subsidy. Okay.
yeah,
Make sure you go on to the ATO website right now and you can register for it. You
brilliant.
obviously you'll say that yes. You when you answer all the questions, you'll say, "Oh yes, we got da 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 da."
Yep,
But what you will then do is you will say, I don't have any employees, but I am going to register a business principal. I forget the exact name that they use, but a business an associated person, and that becomes you, and then you will be getting the $1,500 a fortnight as part of that.
yeah, 'cause they might have changed that because I did register it, but I better go and have a look again and redo it because
Yeah.
yeah,
Have a look, because if you tried to do it
yeah,
in the first 2 days that registration was open, there was actually a bug that prevented people from leaving the number of employees as zero, and so you weren't able to do it properly. So do go
okay,
and have a look at that. It's on the but yes, there's no reason why you can't qualify for that.
yeah, because I've got my Gov ID login, so I just go through the business portal with that. Yeah,
Cool,
yeah.
done. Okay.
Hmm.
Any other questions, anybody? No, everybody's happy. All right. Okay. So the last thing that I just wanted to bring up is the fact that in the whoops in the next presentation that I'm working on is to show you how to look at what the impact of all of these changes to your employees, to your productive hours, to all that sort of jazz. What impact is it going to have on your business? And to look at answering questions like, what is my business now capable of producing, and at what point can I turn around and sustain higher salaries, and how is this going to impact on everything? So we'll be getting a notice out about that in the not too distant future. In the next hour or two, we'll have this presentation up on our YouTube channel, so you'll be able to watch it again. But again, I stress, if you've got any questions or any concerns about how you're doing these things, make sure you contact any of us here, and we'll turn around and help you sort out exactly what you need to do. Apart from that, I hope the rest of your day is a stunning one, and that life looks after you. There are a couple of other things that you may find of assistance. One being, there is this thing called the Financial Assistance Finder, because some local councils are also doing things that may help you do things. There's also a commercial tenancies relief scheme that you can search out, and which may help you in regards to your own commercial rent. Obviously the tax office and that boosting cash flow for employers, all the links are going to be part of this presentation when we post it up as well. Anyway, other than that, thank you very much, everybody. I hope that things are looking better for you as each day goes by. Take care.
Okay, thanks, David.
You're welcome. You're welcome.